Hi, welcome back to High on Utah. This is Heather Groom, and today I'm sitting with my accountant, who is awesome. It's Paul Olsen of Welch and Olsen in Pleasant Grove. So today he doesn't look much like an accountant, by the way, which was really a funny story, actually, how I even met Paul. But we had an awesome accountant years ago. I don't even know if Paul knows this story, but years ago we had this great accountant. Then he retired. He actually was really sad. He had a brain tumor, and so he retired, and we were devastated because we just really liked him so much. And so then after that, we tried different people, and one of the things, and I've told a lot of my clients this, is that a lot of times accountants, and bless your hearts, because I really like you all, okay? You have a different skill set than I have,
We get
okay?
it.
Yes. But one of the things is that accountants, most of them that I went to, did not understand real estate. And so as we began to become investors and we would buy properties, I mean, I made some pretty big mistakes because I didn't know what questions to ask. And they didn't ask me either. So it was, one of those situations. Like, I remember we had two rental properties, our very first two. And he's like, I don't think you can write off really much with those. And I was like, well, I know I can. I just don't know how to do it. So anyway, long journey. We probably had five different accountants in 7 years. And then I found Paul. I went to someone I really trusted, and I know he's really good. And I said, I need to know who your accountant is because I need somebody who understands real estate and just some, kind of more in that vein. And so anyway, he referred me to Paul. And Paul, I show up. I remember I met you the first time, and you looked about just like this, actually. And there was no pocket protector. There was like, it was just totally different. You didn't have like files like, two
Sitting on my
feet
desk.
deep. Like you weren't like, you didn't have a Rolodex or anything, and spinning through everything. And so I was like, okay, well, this is interesting, but I'm going to give this guy a shot. And anyway, we're now good friends. And so Paul is my awesome advisor. And anyway, and he owns real estate. And that was actually one of my questions that I started asking different CPAs too, is I started to say, do you own real estate? Because I had even one that didn't even own a house and rented. And I joke around even with my CPA clients. By the way, I have some CPA clients and
All right.
or CFOs, and they, and it's kind of interesting because typically I can even talk to them on the phone, and within 5 minutes I know. I'm like, "Are you a CPA?" And they're like, "Yeah, how'd you know?" I'm like, "I just know. I just know. I know from the questions you're asking." I'm like, because I like to say as realtors, we look out the front window. CPAs are looking out the back window, and we're driving a car, and I'm like, but we need to meet in the middle,
Yeah.
okay? Like, we need to be friends. And so, anyway, so I have Paul here today because I always get calls. People are always asking me who does my taxes, and I even had a call literally yesterday. I was in Atlanta, and one of my buddies called me up and was like, I just know that you'll know some kind of questions around 1031s and also capital gains and things. And I said, okay, I said, I always give the caveat. I can tell you what I do, but I am not licensed. So at the same time, I can tell you a little bit, but then I'm going to give you Paul's number. So anyway, we're glad to have you today. And maybe just do a little quick intro and who you are and kind of your background. And anyway, we'd love to hear from you.
Absolutely. No, I'm excited to be here. Thank you. That's a very generous introduction. So I
Well, it's
appreciate
true.
that. So a little background on me. I was born and raised in St. Louis, Missouri. Came out to Utah in high school. Dated my wife in high school, actually. And left on a 2-year mission for my church. Came back. She was still there. We got married. Um, it's interesting. You mentioned a lot about real estate. I do. I'm heavily involved in real estate, right? My first experience with real estate. I was going to school at BYU, playing football,
Oh, I did not know this part. Okay.
and I was a walk-on. I was a
Yeah.
preferred walk-on, so they got me into school,
Okay.
but no scholarship.
Oh,
When I left home, it was my responsibility to make it work, right?
okay.
I come from an amazing family. Um, and me and my wife, our strategy in college was if we can sell. So I have a sales background. So during the summer, I would go sell satellite so I could pay for school, food, whatever. Keep the
Yep.
family afloat,
Summer sales
tuition,
background,
summer sales
which we'll
background.
talk about on another episode because I didn't realize when I was in Atlanta just recently, like this last few days, I met up with some of my friends and they had no concept of what summer sales were. Like in
Oh, wow.
Utah, I
Yeah.
feel like Utah, Idaho, Arizona, we probably know. They were like, this is a thing? Like what? Anyway, I just had to throw that in because I
Yeah.
was like, most
Yeah.
people don't understand. But so that means he worked hard. Bottom line,
Yeah.
he worked hard in the summers and made a pretty good amount of money.
I did. So the goal was obviously pay for school, pay to live, but made enough that we could make a pretty significant down payment on our first home while we were in school. And the idea was, hey, we'll
Wow.
live in the upstairs of this duplex, we'll rent out the bottom, and if we don't have a payment, so we're not paying rent, we're paying a mortgage, it's not coming out of our pocket while we're in school, we can make it work. So my first experience with real estate was out of desperation and house hacking during college, actually. And interestingly enough, I was studying accounting, tax. And so I was very interested in, all right, how can I maximize the tax benefit of this first little rental that I
Yes.
had that was mine? Um, and so in school, I was studying a lot about real estate, taxes. I got my master's in tax from Brigham Young University. But not only was I studying about it, I was doing
You
it.
were doing it.
I
And
was
that's the
doing it.
key. Yes.
And I think that's extremely valuable. Anytime you're getting advice from any advisor, any consultant, is okay, great. You know a lot about this. Have you done it?
Yes.
Right? Are you doing it?
Right.
What was your experience with it? And I feel like that's been valuable for me throughout my career, especially with clients and relationships. One coming from a sales background. Nothing happens in business till something is sold, right? Um, but having the real estate experience, especially with where our firm is today, with individuals like yourself, and working with a lot of investors throughout the entire nation, to be honest with you, understanding exactly what they're doing and being able to speak to the technical things, but also knowing, hey, what's the economic substance of this transaction? What's the tax side of this transaction?
Yes.
Can we put a tax lens on what you're doing and potentially tweak this so you're going to get more tax benefit with the same transaction? And that tends to increase the value for our clients. So,
Exactly.
little my background.
I love that. And I love that intro. And also, like I was joking around about, the CPAs always see out the back window. I feel like Paul's in the car. Okay. So he's not just dangling out the back window or in the pickup truck or something, but like he's in it. He's looking out the front window, the side windows, the back. So that is, I'm very thankful for that. And like I said, like we kind of interviewed him. I mean, I don't know if you even remember this, but we were like, we've gone through 5 accountants in 7 years. Like, here's our questions. And then we were like, wow, he actually, like, the first question I think was, first of all, do you own your house, or are you paying on a house? Like, you have a mortgage, I don't care, but you're not a renter. And do you own any other properties? And so when you passed my test, so that was fantastic. But I wanted to have him on today because I think I get questions a lot about rentals, and like I said, a lot of people, I cannot begin to stress this. And like I said, Paul is not paying me to say this, okay? But I'm just gonna say this, like, people, and they do the same thing with a realtor. They sometimes are like, oh, my brother-in-law does my taxes,
Mhm.
and he works for a hospital or whatever it is. And I'm like, okay, but he's you doing like corporate side tax. Does he really understand residential? Because that, like, it's kind of like with real estate. I'm like, you need to find a realtor that also, just like you said, kind of practices what they preach, and also like is in it, because that has been so valuable for me to be able to give feedback. Okay, this is what I've learned with Airbnb world. This is what I've learned with short-term, long-term rentals, even whatever it might be. And so, so kind of going back, I think that that's really important. And I think people a lot of times they kind of chintz out and they'll be like, oh, but so and so will prepare my taxes for $150. And I'm like, okay, and you're probably leaving on the table like 20K, literally, because they're not thinking of, it's like, it's not about filling in the forms. It's just like with real estate. It's not about just looking on Zillow or Realtor.com or Utah Real Estate. It's like there's so much more that goes behind that. It's not like that's the 1% of what I do. It's like, oh yeah, that's the alert and that's the property, but there's so much more that goes behind it.
Well, and maybe something to add to that is when you have an agent or you're working with someone who's done a lot of those same transactions, and I know from conversations that we've had, because you've been through almost every real estate scenario
Yes,
there
I
is,
have.
and we've sat in my office and we've penciled out a lot of different stuff.
Yes.
And for someone to have someone like you in their corner, who can speak technically about the tax ramifications
Yeah.
of a certain transaction. So when you're walking around, it's not just, hey, we're looking at this house. Do you like it? Right? Okay, we
Right.
can put an offer in on this. Anyone can do that, right?
Mm-hmm.
But when you have the background that you have in terms of talking technically about a 1031 exchange, basis calculations,
Self-directed
long-term,
IRA.
yeah, long-term capital gains, how are we going to fund this? How are
Yes.
we going to use IRAs? And you've done all that. There is so much more value that
Yes.
comes to a buyer in that situation
Oh yeah.
when their advisor, you,
Yes.
can bring so many other aspects to the table. Hey, have you thought this through, this through, this through, this through? And by the way, I can connect you with anyone that can help increase the value in this aspect of the transaction.
Well, and I'm all about I want people to grow their wealth portfolio. And that's what I tell people. I'm like, my job is really I'm a problem solver. My vehicle is real estate. And what I try to explain is that there's so much more that goes into it. And like I said, this isn't about you getting QuickBooks or you using,
Mhm.
TurboTax to figure out what you owe. It's like, no, there's so much more that goes behind every transaction, everything you're doing, P&Ls, like whatever they're doing, are they really analyzing it and do they know if it's really a win for them? And is it because people just leave money on the table so easily because they're afraid to kind of take that next level or that next step, and I know you know exactly what I'm talking about because you see it all the time. So
Yeah.
one of the reasons I wanted to have Paul on is I wanted him to, because I have a lot of my clientele is pretty all over the place. I have a lot of investor clientele. I have first time investor clientele, but I have some that own 100 properties or more. And then I also have some of their kids now are buying. So it's kind of funny because I used to traditionally not do a lot with first time buyers. Now I'm doing quite a bit with first time buyers. Um, because they're having kids, right? Or their kids are ready to buy or own, and invest. And a lot of times the parents may not understand. It's like, hey, it's been a win for them over time. We always say real estate, it's a win no matter what. It's just sometimes it takes more time, right? And so usually the parents kind of have done pretty well. And then the kids are like, okay, now what? And sometimes they do summer sales. I love working with these summer sales kids because they make this amount of money in the summer, this good amount. And then I have to kind of tell them, like, you could be buying a house, you could be
Yeah.
doing different things with this money. Don't just go and buy a sports car. Don't buy depreciating assets. This is how I talk these days, but I'm like, you need an asset that is going to work for you. And so, but I love that when I talk to Paul, like he always gives me new ideas, and I'm pretty idea like forward. I can give you pretty creative, and Paul can tell me when I'm too creative and when I'm not creative enough. And so,
I do remember one conversation.
oh boy,
Every once in a while, I'm gonna tell this story.
uh oh,
Every once in a while, someone comes to me with like, something, and I'll be transparent, like, I would need to research that.
yeah,
But your question was, hey, can I 1031 into water shares?
yes.
And I was like, geez, I've never come
No one's
across
asked
that
that
before.
before, right? Yes.
And so as far as you coming up with creative ideas that are legit,
That are
um,
legit. And that was legit, by the way, because guess
it
what? You
was.
actually can in the state of Utah.
Yeah, yeah.
So there's just something there.
So Heather taught me some tax
Yeah,
strategies.
I just he was like, "What? What are you talking about? Water shares? That's not property or real property." And I'm like, "In the state of Utah, I've heard."
This is true.
So
This
yes,
is true.
so that's
Something,
funny.
maybe something that's kind of interesting. Um, we have conversations all throughout the year.
Yes.
a lot of times people will make the mistake of, hey, it's April
It's
14th,
April 14th, and
and I'm gonna go call my accountant and see if there's anything I
and
can
it's
do.
usually the brother-in-law that is using TurboTax. Okay, I'm just gonna
Yeah.
throw that together.
If you're having your tax strategy planning meetings on April 14th, you already lost,
You've
right?
already lost a lot.
And a lot of the conversations, at least that we're having with our clients, and I don't know that, and maybe it's just my own exposure to real estate and the network and the people that I'm with, but real estate has kind of become our niche, right?
Hmm.
Um, but a lot of the conversation for anyone that's buying real estate or investing in real estate in June, October, November is, what are your plans for real estate next year?
Hmm.
And the reason that is you're going to file your tax returns
Yes.
based off buying power.
Yep.
What amount of loans do you need to get next year to fulfill your real estate goals?
I hope people are totally paying attention to that, because
And
that is so important. And that's something that I learned after I'd already become a bit of an investor,
yeah, yeah.
you know?
And I've talked to so many people like, oh, I can't buy a house. I can't buy this rental because my tax returns, I wrote everything off.
Hmm.
And so at the time you're thinking, oh, my CPA is a genius. I paid no tax. I love this guy. But you weren't looking out the front window.
That's right.
You were looking out the back window,
That's right.
right? So a good CPA, a good advisor, especially in the real estate space, is going to be having a conversation way before the year ends about, hey, let's think 12, 18 months down the road. We need to file your tax returns based off of your capability to get debt, if you're going to debt finance,
Right.
to go take down these properties that you want to do. And then you're looking at AGI numbers, and I don't mean to get way into the weeds, but hey,
Hey, we like in the weeds. Go
we
ahead.
we need our income to be at this level
That's exactly right.
to get this amount of debt.
Yep.
And so I'm on phone calls with lenders, with you, agents,
Hmm.
my clients, to make sure that, hey, we're coming in with the presentation of the tax return itself in a way that's going to get you the buying power that you need to go take down whatever your goals are the following year. So if you're not
So
planning in
true.
advance,
If you're thinking right now, like it could, because I do have some first time homebuyers, which I love working with, by the way, because I always say, I wish I would have had a mentor. I wish I would have had somebody in my corner that I could ask questions to. So, I mean, I love not just helping my experienced buyers, but even these new ones, because I'm like, I would have been so set up if I would have done things a little differently, just a few little tweaks. Just as a little random side note on that, like my first house that we bought was $100,000. It was a tiny house. It was 1,400 square feet. It was brand new. It was a Salisbury home. When Salisbury, like, it was like we built, like, I think the fifth home that he had built. They built it. They said, we'll have it done in 90 days. And they did. It was the most insane thing ever. But it was in Wesley High, which actually would, kind of over by Vets ball field. Um, and I remember we made $20,000 on that in 2 years. We thought we'd won the lottery. Okay. Like, I mean, we were seriously like, $20,000. We made $20,000. We're like, and I was like, yeah, we need to sell this. And I knew the 2 year rule even back then, which was
mhm.
really crazy. And I remember Brent throwing it out, and he was like, "Do you think we should keep it as a rental?" And I had always been told, my parents are pretty conservative, and they were like, "Don't keep things as rentals. Don't keep things as rentals." And I was like, "No, we want the $20,000." But we didn't know. We had no idea. Now that house rents out for probably $2,700 a month. It would have been long paid off. Um, it would have just been like passive income. That would have been amazing. Even if we had to renovate it every 10 to 15 years, then who cares? You know? And so instead we cashed out, we paid the realtor fees, we did everything. This is before I was a realtor. And by the time we walked away, I think we had made like $6,000,
Yeah.
And I
Yeah,
was like,
exactly.
woo, $6,000. Okay, that's not going to totally help us on our new down payment, because we were
Yeah.
building another house. And at the time, it ended up working out pretty well because I knew the market was about ready to shift even back then. I've been always pretty like market savvy and timing wise. And we got into the next house, which was a better investment because it was like a $220,000 house. Then it went up. And, I think we sold out for like 360 in a down market, like when everything was annihilated in the meltdown in like 2007 or 8. And so anyway, I mean, we did really well with that house. But I still wish I would have had a mentor. And like you're
Mhm.
saying, like the tax planning is really key. I cannot stress that enough. Um, I get people calling me every March,
You
early
are their
April,
tax plan. Call Heather.
and they're like calling me, and I'm like, I'm not okay. First of all, I'm a realtor, but I'm like, they're calling me and they're saying, okay, but when I'm doing my taxes, and I'm like, if you keep going, and I want to stress this, if you keep going on that same trajectory of only doing what's behind you, you're never going to be getting what's ahead of you, because too many people are like, they look at taxes as a backward glance. And yes, it's indicative of the year you had. But what they don't understand is, for even their own goal planning, they need to be thinking, how is their income affecting them? What does their tax record or history look like to a lender? What does that look like to the government? I mean, there's so many kind of ways to look at that. And I remember when we first had one of our first tax planning meetings, like this is a long time ago. I didn't even know that was a thing, by the way. I remember I was just like,
You
wait,
thought taxes
what?
were just a result of the year.
Yeah,
You
I
didn't know
was
you could
like,
plan
this is
for
a
it.
result of the year. And it was when I started picking up properties. And the accountant at the time goes, we're probably gonna need to talk again, because are you planning on buying another property next year? And I said, yeah. And he's like, well, then you need to really think about, what your tax packet looks like this year. And it was like, I'm
Yep.
like,
Yep.
oh, just like how you plan and make goals. And I've made these goals of buying a property or whatever it is. And so then I started saying, okay, I have goals of what is my maximum tax strategy as far as to save money, because I would rather much, and I've done this a few times, instead of paying that money basically as in taxes, it's like, hey, I would rather put that down on a house,
Yep.
and that can become my down payment. I mean, um, and so it's so important. Like I said, I can't stress that enough. But if you're not doing tax planning, I'm actually already looking. So right now we're in, what are we in? February of 25. I was already thinking about my year 25 and 23,
Yeah.
at the end of 23, and then throughout 24. And I think that's one reason I've also done really well, is because I've made certain real estate goals and passive income goals, which we've talked about a little bit too, because you really need passive income as you get older and you're looking at retiring. But then I'm always looking, like, even right now, it's so confusing as a realtor when we start talking about this year. I'm already like, I already have deals going on for 2026
Mm-hmm.
right now.
Mm-hmm.
Like, I'm already in, even though it's February, I'm in 2025 and 2026, and I have a little outlook on 2027
Yeah.
already.
Yeah.
And so if you're not doing that, that's huge. And then I I do actually, a lot of my volume is in the fourth quarter, because I'm calling my clients and I'm saying, usually by August,
They're wanting to pull
I
the
start
trigger on
well,
something.
yeah, and in August I'm calling them and I'm like, have you thought about buying a property before the end of the year?
Yeah.
Because
Yeah.
this is going to help you. And so this last year, I'm just going to use this as an example. I did, in the last 4 months of the year, I did 60% of my business,
Oh, wow.
because I basically called and I said, you got to buy something right now, and you'll thank me later because of closing costs and different things. And so, and there were incentives. The other thing is, people don't realize the end of the year, it's a freaking amazing time to buy,
Yeah.
because you've got these end of the year incentives. You get the tax write off. I mean, you've got certain things. So anyway, so I know we've talked about that, but tax plan, that's huge.
One of the things that you mentioned, you talked about everyone needs passive income,
Yes.
right? One of the beauties of real estate, there's a lot of aspects that are beautiful about real estate. Um, when you're creating passive income through real estate, oftentimes that's done with OPM, other people's money,
Yes.
right? So when you're going to buy, when you're talking to clients at year end and telling them, hey, now's a great time to pull the trigger on X property, right? Oftentimes that's a conversation about potentially tax strategies, deductions, paying less tax, and real estate is like triple dipping in terms
Yes.
of one, tax planning, and there's a ton of benefits of real estate with tax planning. You're talking about depreciation, eliminating other passive income sources through depreciation. Those are called paper losses. So when you buy, you could buy a property with all debt, and you're still getting the tax benefit from it.
With other people's money
You're
too.
using a
By the way,
lender's money or a
that's
private
the
lender
thing that
money.
people don't understand is they have this vision that they're paying for the property all in cash or something,
Yeah.
or that they need to. And I'm like, no. And then they get hung up on the interest rate. And I'm like, well, it's because the bank is taking a risk with lending you money. But at the same time, so that does come at a cost. But you're borrowing other people's money to make money.
Yeah.
That is amazing. Like, we should all be like jumping up and down about
And
that.
so not only, okay, so I've eliminated or significantly reduced my tax liability through this real estate transaction.
Yes.
Right? You're also having an income source through rental income, right? Other people's money
Other people's money
is
that's
paying down the other
you.
person's money.
Yes.
And then you get to keep what's left, right? Hopefully you've penciled the transaction. So if it's a rental property, you've got cash flow. Now take that one step further. One of the biggest transfers of wealth in the United States of America is through real estate. And what people do is what you're doing is they're buying real estate over and over again. And when and if they sell that real estate, they're doing what's called a 1031 exchange, right? They're taking the gain on the sale of that real estate and just rolling it into what's called a like kind property.
Yep.
Another rental property. And so this massive economic gain that you just received from this transaction, you just kick it down the road.
We always say you kick it down the road, because it's not that people always are like, they think it's magic. They're like, oh, my taxes disappeared off that. I'm like, no, actually, no. But what you're doing is you're procrastinating, but in a good way. You're kicking down that tax consequence of your gain. So now you've got your gain, and you can leverage that gain a lot of times into two properties. So like we just did this for a client. They basically made, I showed them why they're like dumpy rental that needed a massive reno. I was like, you're now getting less money for it every month. Now what you can do is you can sell that, take this big gain, split it into two properties, and now you've got two sources of income, and you've leveraged enough from other people's money that you're still, I don't care if you're even making $1 a month. Just green is good. Like, make one green dollar is fine, because I know that property, whatever I'm going to find for my clients, I'm like really crazy about doing this kind of stuff. I know that I can find them something that is going to have an appreciation gain too. So a lot of times I find them on these properties, and even within a year, now they've split into two, and they've hit an appreciation gain of 5% on each of the properties. So when you start looking at that snowballs really quickly, and people don't understand. They just feel like, oh, I'm so far behind in the game of real estate. And I'm like, I don't care how old you are. Like, there are still things you can do with real estate at any age. And we're gonna talk to somebody more in depth on a different episode coming up on kind of 1031 exchanges and all sorts of different options, because you can go a million levels deep,
They say don't wait to buy real estate. Buy real estate and wait.
And that's exact. And that is so true. But I would just say, I want to kind of give some kind of tax tips right now to my clients and viewers. What are some things that maybe people are not taking advantage of right now?
Yeah. No, that's a really good question. So in real estate in particular, cost segregations are huge. Cost segregation is where you perform a study on a rental property or a property that you own, and you're separately identifying all the assets inside of that rental property. And you can accelerate the depreciation.
This is part of my game, by the way.
Yeah, this is if you're in real estate and you don't know cost segregation, what are you doing?
My ultimate compliment was when Paul actually called me and said, Heather, your tax strategy is really working. So I'm like,
exactly.
Yes.
But what you're doing is you're accelerating the amount of depreciation that you're taking on this property. And so on your tax return, you're losing money. Yeah. Because you have a massive depreciation expense. You didn't pay money for that depreciation expense. Maybe you got debt, right? but you get the full tax benefit. So from a tax perspective, and to Uncle Sam, you're saying, hey, I lost money. I'm getting hosed.
Right.
And so my left pocket, my tax return, I'm losing money. In my right pocket, I've got a ton of cash flow. I've got everything here. And so I'm not paying tax, but the cash is in my pocket. That's perfectly legal.
Even writing off the closing costs. What's crazy is you're writing off even part of the closing costs of other people's money.
Yeah. Yeah, exactly.
That's amazing.
Exactly. And in real estate in particular, one of the beauties of real estate is for tax purposes, that property is depreciating.
That's right.
What's actually happening?
What's actually happening?
That
It appreciates.
you have, for tax purposes, you're depreciating an asset.
So you're like, we're going to draw that.
Yeah, exactly.
You know?
Exactly. And you're appreciating significantly. Kind of back to, these 1031 exchanges, cost segregation. So people are doing a lot of those. And one of the biggest tax planning strategies ever is buy real estate, do 1031 exchanges,
Yep.
and then die.
Mm-hmm.
And that sounds a little dramatic, but let me explain.
But we're going to explain, yes, because I'm like, yes.
I don't wish death on anyone. Life is beautiful. But what actually happens is all those gains, we talked about those gains that we just kicked down the road or we procrastinated, right?
That's right.
And we rolled them into the next property and the next property and the next property. Well, when you say you've got a big real estate portfolio, upon your death, your heirs get what's called a step up in basis.
That's right.
Meaning, you may have pushed away millions of dollars of tax liability throughout your life, right? Well, when you die, your heirs receive those properties at fair market value the day of your death, meaning that millions of dollars of tax that you kicked down the road disappeared.
Yep.
And that is why I say one of the greatest ways to transfer wealth, which is being done all the time in the United States of America, and the tax code allows it, is buying a ton of real estate, performing 1031 exchanges, really not cashing out
That's
at
right.
times, and you die,
Right.
And
Your heirs will thank you because like I've done several where I had a client where they had about 10 properties and they inherited, and because they had that stepped up basis also, it was, it's beautiful. Like they didn't know the taxes on that gain that had been kicked down the road. So that's one of the things that I think people don't realize. So just like you're saying, the cost segregation's huge. I think even just 1031s are the most beautiful thing in the universe right now. And leaving those to the kids is huge because if they don't owe that tax consequence, it's a sitting asset, which is amazing.
Yeah, and ideally, your children have worked with you in that real estate portfolio. You're not leaving them something that they have.
Yeah, I make my kids clean the Airbnb.
No
like
idea.
At the Airbnb, I'm like, hey, 4 times a year we're going down. You're doing a deep clean. Yeah.
Here's another tax strategy if you're not doing it. You talk about your kids cleaning the Airbnb.
Yes, this is a good one.
If you own rental properties, right, or you have any sort of business, right, whether you're self-employed, you've got a rental portfolio, you should never be paying your kids for chores. Now that sounds somewhat controversial. Your children should be on payroll, right? And when I say payroll, you should be paying your children to work in your business.
That's right.
And the reason that is, and it really works for children that are 17 years old and younger, but if they've got responsibilities inside the business, you can go pay that child. In 2024, it's $14,600.
That's right. Okay, did you hear that? $14,600.
$14,600.
It used to be $12,000 a few years ago.
Yeah, it inches up every year. But you go pay that child $14,600 and you get a deduction because you paid wages to somebody, just happened to be your own child.
That's right.
Well, because you kept it under the standard deduction limit, you get the deduction for paying the child. The child now has that income. They don't have to pay tax on it. They don't have to file a tax return. And you could even turn around and go fund a Roth IRA with earned income that your child earned. And so you're almost double dipping with, all right, I'm getting a deduction for paying my
Exactly.
child. I've funded their Roth IRA, which is a great tax strategy as well. And my children are learning to work.
It's like a quadruple win. I mean, really, like I feel like we didn't know about that until just the last few years. And that is amazing. I mean, because you're getting, like you said, that extra write off as well. And you're making them work, and I've told my kids, I'm like, hey, if you think you're inheriting even a few of these, well, it was funny. My kids are still a little traumatized, by the way. I'll just air this out, but it was kind of funny when they were like teenagers. I remember one day, I guess we were pretty blunt with our kids. And anyway, we looked at them, we said, don't count on inheriting anything. Like, you guys have to learn how to work. We're probably just going to leave it to like a nonprofit or something. And my kids like cried. They were like, and they still talk about this. They're like, Mom, that was so traumatizing. But now they thank me, by the way. They were like, because they had to then, I said, don't think that you're inheriting anything because we may choose. It's not that because we love you, we may not give you anything. Of course, we really will leave them something, and even just the properties, right? And the ones that we have that we've done through 1031 exchanges. And so, but I wanted them to kind of have that perspective so they would have to learn to work hard and do things. And then again, I was like, when we've been setting up an Airbnb or things like that, I'm like, hey, you guys need to come down and help clean or help screw together furniture or whatever it is. Because I'm like, in the end, if you think you're getting this, then you're going to be working for it too,
Yeah,
So,
yeah,
but that's really important, that 14,000, it's 14,600,
yeah.
right, this year.
2024.
And so, well, when I say, I always, in real estate, we're either talking about year ahead or year behind, but never the current year. So it's
What
kind
was it
of,
this year?
I
Last
know.
year?
So I'm like, I'm saying 2024
Okay, let,
in the
let me
past.
let me before we move on from that, let me give you one more nugget with
Yes, I
real
love
estate.
it.
Okay.
Nuggets, go for it.
Anyone that owns their personal residence that is self-employed um, should be using what's called the Augusta rule.
And we learned about this recently.
Good, very
Yeah.
good. Where you are renting your home to your business every single month to hold board meetings. Oftentimes,
Or events. Like
accountants,
I'm going to be
events.
doing events this
Yep.
summer, like some pool parties and
And the beauty of it, even if it's not an event, maybe you don't throw parties, you can at least hold a board meeting
that's right.
with your board members. My board members are me and my wife,
Yep.
right? Maybe the rent isn't quite as much as throwing a huge party, right? But that's a beautiful tax strategy that you can use just on your personal residence.
And it's just it's all of those things that just add up, and it's things that again your online software service is not going to tell you or know
TurboTax didn't
about.
come out with
Yeah, it's like, hey, did you know about the Augusta rule? No, it's not a thing.
Yeah.
So but that's been huge, and I'm actually excited about that because I want to start doing some client events at my house. We just put in a pool, and we're kind of wondering why, but anyway, but now because I'm like, oh, more work for
Your
us to
house is
do.
beautiful,
Oh, you're
by the
so
way.
nice.
Yeah,
I'm like,
that's a
yeah, this
showstopper.
is, well, we're going to try to have some fun. Okay. And so, but again, if I had to rent out a venue, it would be a lot of money. And
Yeah,
so
yeah.
I'm very excited about this summer.
Put the money from your left pocket to your right
That's right.
pocket.
So
You
I
get
was
a
like,
tax
hey,
deduction.
I was excited to see all of you, okay, and my clients at this, but now I'm also excited about the tax implications as
Now
well.
you know why Heather's throwing parties.
That's right. You're gonna know why. But okay, so let's kind of talk about so we've kind of talked about some other things. Is there anything else that people should know and about, as because they're going to be, I mean, it's already almost too late. I know that sounds funny, but like but is there anything else that they could think about as they're probably preparing their taxes because we're just heading into that season right now?
Yeah, yeah. I think so. What's done is done, and so in 2024, we're at the beginning of 2025 right now. In 2024, if you didn't tax plan, it's kind of, I'll tell clients, like new clients that are coming to us, hey, it's damage control. Like
That's right. That's what I was gonna say. Is I was like,
we're gonna do our best here.
We're just throwing on a new coat of paint, okay? It's
Yeah.
like,
We're putting lipstick on a pig here.
yeah.
But I would maybe even more casting a further vision than just your tax strategy. But what are your goals?
That's right.
What does the future look like for you? Your tax return is I almost view it as like this art piece, right?
Yeah.
You're crafting it all throughout the year, right? I'm painting this tax return throughout the entire year. Now that sounds really nerdy because I am a nerd,
No.
but
Well, I'm nerdy in a different way, but yeah, no, I get it. No, and that's the truth right
when
there.
you know what is my vision, what are my goals, um, and then you take that vision and goals back to an advisor that says, okay, I'm going to help you bring this to life, and here's the different things that we're going to do,
That's
right?
right.
So I would be talking to lenders. Hey,
Mm-hmm.
what amount of income do I need to
So
show
good.
in order to buy these two homes? Those are my goals for 2025, right? I'd be talking to my real estate advisors. Hey, where are these homes, right?
Right?
This is my vision, bring these to light, right? Take me to the promised land.
Yes.
Where is it at? And once you have kind of those two pieces, and then you've got your CPA, your tax advisor working in tandem with those three, you can really craft something beautiful, um, and
I
extremely
love that
tax
you're
advantageous.
have you ever heard a return be described as beautiful? Crafting something beautiful and a piece of art. I mean, I've never heard that, but I'm loving where we're going with this. So,
Anyway,
yes.
so yeah, I'm passionate about my work. It makes a difference for people.
Well, and that's the
It does.
thing I cannot stress enough is that it will change your life because one of the things that I think hit me a few years ago and why we kind of kept interviewing different CPAs and everything was because again, they were looking in the rearview mirror the whole time. And when I would ask them, I said, and they're like, "Oh, well, I just focus on doing tax returns." I'm like, I'm hitting a level where I need somebody to help see the vision I have of my life and help me craft that. And that was something I just was not getting in these other places. And I would say, and I remember actually one of them, I wasn't offended. I've heard a lot of things that could be offensive in my life, but he looks at me and he's like, wow, you're something else. That's what he told me. He's like, I haven't seen a lot of women like you before. And I was like, well, okay, that might be my answer that I need a different CPA too, right there. But he was like, wow, because I was like running things by him and ideas, and it was like I was trying to almost tax plan myself without having the tools and the proper background. And so I was looking online and reading things, and and when you do that, it's a little bit dangerous because first of all, there's federal rules, there's also state, and so you're not always getting the correct information. And so I think that's really important. But as I started to just like plan ahead, it's so important. And one of the things I've said, even for new home buyers, is talk with a lender. Like, call me up, I'll give you a good lender's name. And you really want to talk with a lender before you're buying a house. I don't like if you're in college right now, I still want you to talk to a lender right
Absolutely.
now because you know what? I want you to be right ready to go. And most of my first time home buyers, I would say 90% of them don't even know that they qualified. And they've been qualified for a while,
Yeah.
And, of course, there's always the self employment ones or the summer sales, and there's different rules around that. But that's why you talk to someone because you need to know what your options are. And I think that it's just so smart. Like, again, tax planning, tax planning, tax planning, and knowing your goals. And one of the things that hit me, I remember, I think it was when I first met you, Paul. I remember you were like, well, what are your goals kind of going out? And that was like the first time somebody had asked, like a CPA had really asked me what my goals were for like that following year. And so that was huge for me because I'm like, thank you for asking because I
I'm
have a
glad I asked
plan.
that. Jeez.
And instead of being told I'm like some crazy lady, I guess, but it was nice to know that somebody else valued that. And I've been able to grow my own portfolio, as I've mentioned on this show, faster than I ever expected. And I really do attribute, Paul, I attribute just having goals, looking not just in the past, but in the future and saying, okay, what is it I'm really wanting here? What am I trying to accomplish? Because for me, there's tax strategy, and then there's also I'm gonna say probate planning, a
Hmm.
little bit like what am I wanting to leave and retirement, so you're kind of needing your tax strategy is different than the other two. And too often I think people just kind of throw it in all together, but it's like, no, what am I wanting to leave to my kids? What am I wanting to do so I can retire? And what does that look like? What do I need to retire also? And kind of what can happen there? And then again, am I paying too much in taxes? And let me assure you, there were a few years ago, I paid way too much in taxes because I had somebody doing my taxes that I like. Yeah, that was a catastrophe. But anyway, that was a
Well,
different story. But it was like, man, um, it was just so freeing for me to just get kind of a team approach. And when you have that, it's like it ignites and you can accomplish far more than you ever thought you would.
yeah, in general, in life, in business, wherever, a good partnership, 1 plus 1 does not equal 2
That's what I always
in a
tell
good
people.
partnership,
Right.
right?
Yeah.
It's 4, it's 5. And so when you're planning ahead, you talk about tax planning. Well, when you have your vision and goals lined out, well, maybe your tax plan reduces your tax so much that it frees up your next down payment
That's exactly what
to
it
go
did for
fulfill
me.
the vision
Yes.
for yourself, right?
Exactly. It's like a trickle effect. So it's like if you actually, like I said, I saved money in my taxes and then I went, oh wow, with that money, I can now put that down as a down payment
Mhm.
on another property, which does impact those other areas of retirement and probate planning. But it's definitely all related, but it's good to realize that there's different goals in those areas that you need to look at.
Yeah, yeah.
So anyway, well, I'm glad we're gonna have Paul on here again because he's a rock star, and like I said, I'm a fan. I refer him to my clients all the time because, first of all, I need help a lot. This is not my area of expertise, and like I say, I like being able to call Paul and be like, "So I have this idea." Usually, and so I need to know. Give me a reality check. So anyway, but thanks for coming. I
Absolutely.
really appreciate it, and stay tuned. Again, we'll have Paul back another day. I hope he'll come back, and we appreciate you tuning in today. Thanks so much.